Okay, so guys, let's continue from where we left from the previous video. We were supposed to be discussing this advanced option, which is trading psychology and trade management. So trade management we've already covered in some videos back then in video. Go and just check video around video 38 of the course. So this is the course. Go and check video 38. No, 37. You will see some psychology. We've already covered some part of it this here, the trade tool. But so let's now cover now the trading psychology in a more detailed way and with with the utmost brutal honesty. Now there are things that we need to know that I'll start by looking at trading psychology and then offer trade management more details. So what do I need to tell you the truth? The truth is this: you are human and not robot. You are human and not robot. So everybody suffers from psychology in one way or the other, unless you automate your process and now start to trade with EAs and bots. Then you won't have emotions at play. Otherwise, since you're human, you make errors. I do make errors myself. Last week I made a lot of errors, by the way, and I ended up a week with a near break even because I was a little bit emotional, and that is the truth. Every trader who trades manually, at some point they step into emotions, and emotions affect a good part of them. So that is something that you have to keep in mind, that everybody is affected by the emotion part of trading. So the only thing is that you will learn to control them as time goes by. So that one I'll walk you through ways in which you will be controlling them. Number two, trading psychology can never and will never be your problem. Will never be your problem before you master technical analysis. So people, a newbie who has no 1 year belt of trading, 1 year under his belt or her belt of trading, or 6 months on the minimum, is starting to explain the reason why his failure in trading is due to psychology. I can assure you, your problem is not psychology. Your problem is you are still not profitable yet, and you are getting into the realm of profitability. And for that reason, the only solution you have as of that time is to give yourself time. Give yourself time to take more stop losses, to take more stupid trades and make decisions. That is the truth. You will have to give yourself more time. As you mature with the time, that is when you will have confidence in your strategy. You will have more screen time, you will have more chart time, you will have more of the things you need to build up a good psychology. So don't come to me that you have a poor psychology and you've not traded your strategy without changing anything for the last 3 months. Your problem is not psychology. Your problem is that you're still not profitable, and you accept that and move on. You're still not profitable and you're still figuring out how to be profitable. Somebody with a psychology issue is somebody who has his or her technical in check. They have a checklist. They have everything in play. Or somebody who has done, for example, you are watching this course. Probably you must have let me just continue as much as my internet is off. You must have completed the course by someone else or by me, and for that reason, you are now better off in doing your technical analysis. That is when we will clearly conclude that that your psychology is having an issue, because you have everything at check, but you for whatever reason you are not following the checklist. You are not following the strategy as needed, and for that reason we can say that your psychology is having issues, or you have trading psychology. But you're somebody who is now developing a strategy of your own, which you should not do. You should not be developing a strategy of your own, especially when people have spent years, like myself, have spent years developing this strategy, this liquidity based strategy, and then all of a sudden you want to come and start developing your own strategy, and you're still a newbie. I can assure you, for that reason, that you've already increased your time of learning the technicals by at least a year plus, and at the same time you've increased your psychology by another year. So everything on your side is messed up, and for that reason you will have to live with that fact that your psychology will be messed up, your technical will be messed up. So you have to give it time. So if you are somebody who has technical in check, you have your you've traded for at least 1 year, or you've traded somebody's strategy that has been trading for at least 3 months, then now that is when we can talk about your psychology having an issue. Otherwise, you don't have psychology issue, you're not just profitable, and you are yet to be there. So stop focusing on psychology and start focusing on executing the strategy well. In the process, you shall have overcome the issue of psychology. So just know that you will not be able to trade like a robot. Nobody trades like a robot, and for that reason just expect that you will always be making a mistake. I hope that is very, very clean. So trading psychology basically are emotions that come to play when you're already break-even trader, or you understand your technical, or you finish watching this video, you've gone to for a test, and now you can see that the strategy is profitable. So the only problem you have is that sometimes emotions kick in such that you don't execute the strategy well. So that is when emotions start to kick in, and that is where you need to know exactly what is happening. And what is happening in summary is that you are starting to have what is called fear or greed. Let me explain and write here too. So you are having what is called two key emotions at play. And the two key emotions are, one is greed and the other one is fear. You are now being greedy for whatever reason that I didn't teach you, I didn't tell you, but now you're starting to be greedy, or you are just starting to have unnecessary fear. So these are the two emotions that we want to discuss in details on how you can go about it, and the different way in which they manifest. So let's start with the first one, which is greed, because if somebody is not executing their strategy well, it means they could be somehow showing some sense of greediness, and that needs to be tackled. So greed is just the desire, the desire to have something. It can be more or it can be less, but what is important is that you are greedy, and that emotions is it's a form of emotion that is trying to take over your normal logical reasoning. So greed manifests in different way while you are trading, and the first way in which it manifests is through over trading. That is the first way in which it manifests is over trading. You're just not being greedy for whatever reason. Now, how do we call how do I explain over trading? Now, somebody could have taken two trades, and this is over trading. Somebody would have taken 10 trades, and it's not over trading. Let me explain what over trading is. Over trading is basically taking low quality setups that don't meet your criteria. Now, if you're watching this and you have taken you know how we trade our checklist, basically you are and then you go out of that checklist just because something looks nicer, and just because you saw that thing happening in ICT or some famous YouTuber somewhere. So you think that why don't I add it today? Just begin to know that you are now beginning to form your own strategy, and we are not part of that. And just know that you are now over trading, whether you take one setup or two setups or three setups using that additional inclusion that is not part of our checklist, that is not something that you've back tested. That is what is called over trading. Another form of over trading is risking past the set amount you've allocated yourself, even in A+ setups. in A plus setups. You have set up that you can only risk 2% throughout the day. You've already set that decision that you can only risk a maximum of 2%. So at what point are you now seeing 5A plus setups? 5A plus setups. Then now you decide that I'll be risking, now let me risk 5% of my account. That is over trading. Don't do that bullshit. Stop and only risk 2%. From these 5A plus setups, try and disqualify 3 and remain with 2. Or like we do, set limits on the 5 and the first one to be tagged. If you get 2 setups tagged, you delete the rest of the orders. Let me repeat, if 5 of them are A plus and you want to track all of them, and your risk is only 2% that you set that I can only risk 2% throughout the day, not, or even if it is throughout the week, provided you've set up a certain amount that I can only risk 2%, I can only lose 2% throughout the week or throughout the day or throughout the month, doesn't matter. The next thing you need to do clearly is set limit. If you're doing limit, set limits. And then once you set limits, what you need to do next is the first 2 to tap. If you are risking 1% each, to tag your limit, delete the remaining 3. Delete the remaining 3 setups and forgo them. Sometimes I do this and I forgo setups, and then this ones that the first tag get me to stop loss, and the one that I didn't tag goes to take profit. It is normal. Trading is not certain, so anything can happen. You just move on. It is not a must that you will be kicking yourself after this that I wish I would have taken all of them. No, that one is over trading and you have to stop that. So that is a way of over trading. Now another form of over trading that most people do is just for whatever reason, especially the people who don't have checklist, people who don't have they don't have checklist. At the same time, they don't have anything that validates their trade. They just take trades. They're scalpers. Scalpers can take crazy amount of trades in a day. So if you're one of them, just find a way in which you can. If you're a scalper, make sure that you're operating with this rule here: risking certain amount for the day, and you're done. You can even go ahead and limit a session, because if you're a scalper, you don't need to be trading New York and New York and London session. Just take one session. You will still get your multiple setups and do your 1-to-1 or 1-to-2 or 1-to-3. Doesn't matter. Just make sure that you reduce the number of risks you take per day, because you will be getting so many setups that are A plus. But then if you don't have this in a place, you will end up blowing your account. Then you will think that you have psychology issue, but in real sense, you are just taking more setups without obeying the risk amount. So that is how greed has been manifesting in my life, and that is how I managed to solve it. So greed is something that you need to take care of. Let not somebody deceive you that you are taking 10 trades, that means that is over trading. No, it doesn't mean over trade if you've agreed that you'll be risking 0.1 throughout the week, and that week you've taken 10 trades. So it means you're still within your risk parameter, and that is still acceptable. I hope that is very, very clear. So make sure that again, still on over trading, you're not forcing any setup. You start seeing what is not there. You start using your own checklist. You start changing your checklist halfway. That is still over trading, so that you can get more setups. If there is no setup, don't trade. If you agree that you're not trading on Friday, like myself, I don't trade on Friday. I stopped. I will not trade on Friday. I don't trade London. I don't trade London at all. You'll never see me trading London, because that one will now be rebuilding the checklist, which I'm not interested in. Again, you will not see me trade more often on Mondays. On Mondays, I tend to relax a lot, because after all, I'll get setups on Tuesday, Wednesday, and Thursday, and I'm done for the week. I'll get at least 10 setups, and out of the 10 setups, 5 will pull back to my and tag me in, and I will get 2 to 3 that go to stop loss, and the rest go to take profit, and that is it. So make sure that you don't take low quality setups. So over trading is only solved by making sure that you are following your checklist to the latter. So follow your checklist. Follow your checklist unflinchingly or without compromising. Follow your checklist without compromising. The other way in which greed manifests is over-risking. Over-risking. So you bring your money problems to the market as if market is the one that took you to that problem. You've not paid your rent. You're bringing your problems to the market. Unfortunately, the market is going to humble you. You've not eaten for 3 days. You're bringing your money problems to the market. Your mom is sick. Your dad is sick. Your family member is sick. Your child is sick. You're bringing your family problems to the market. It's going to swallow you. It's going to chop you. You have fees issues. You are bringing your small amount of money to the market and risking it all. Market is going to teach you never to do that again. So stop bringing your money problems here. When I was making this course, the first thing I ever talked about in this introductory basic setting realistic expectation, this number 3 here, is very clear. Do not bring your money problems to the market. The market did not take you to those problems. It is your choices or an uncontrollable event. Let's say maybe death led to something that now you are now suffering financially. It is not the market that brought you to that problem. Do not bring your financial problems here. This is more specifically to people who have family. I have family too. I have people who depend on me, and I cannot force the market to give me what I want. Please use this for people who are, especially the older people, my older brothers, anybody who is an older person is somebody with responsibility. So you can be 40, you can be 50, you can be 30, you are still somebody who is older. You have responsibility. You can even be 19 and you are the breadwinner of your family. Please don't bring your money problems to the market. It will take that small money away from you to teach you a lesson. So make sure that you're not over risking just because you want too much to solve your money problems. The market did not tell you to have those problems. So please obey the market by not bringing the problems here. I think I'm very, very brutal and honest with you. Don't bring your money problems to the market. The market will take that small amount of money you are trying to bring it to it. So over-risking is brought about by people bringing their money problems to the market. So the solution to this is this: stick to one risk parameter. Stick to risk amount. You can only risk amount. Stick to risk amount for the day or the week. Very clear. If you say that I'm going to only risk 3% throughout the week, that is what you should be risking. Just split it to the number of trades you always expect. Like I expect maybe 5 trades or 6 trades throughout the week. Split that and you know you'll be risking 0.5 throughout the week per setup. Don't take one trade and that trade looks like A plus. It is better than even A plus. And then you conclude that this is one of the most perfect trade that I've ever seen. So you are now risking 6% at the same time or 3% once. You are now trading on murky waters, and therefore the market is going to slap you on the face and tell you what you are doing is wrong. So please stop over risking. No one trade is perfect to get you all your monies at once. Always know that no market is certain, and therefore even that A plus do lose. So what about the day you think that it won't lose? That is the day it will lose, and you will lose your money. So please do not over risk. And if you keep over risking, that is when you're going to blow your account. For me, I have a risk parameter that I follow, and that is very clear. Even in funded accounts, let me just give you that very quick. On funded accounts, I play the game of numbers, whereby I buy between 6 to 10 accounts. And then since I have a risk to reward of at least 5 RR or onwards, I just aim to pass. For every trade I take, it should go to TP or go to SL, and then I move to the next. So I rotate the account. So in most occasions, you realize that my accounts have got just negative 1% risk if I'm risking 1%. So in phase 1, I risk 1.8, between 1.5 to 1.8, 1.9. Let me just place it there. I don't like going beyond 2%. And then one trade should give me 8%, and I've passed my challenge. So from these 10 accounts, I just aim to target to phase 6 should go to phase 2. And then at phase 2, what I do is very simple. At phase 2, I risk 1%. So I risk 0.9% throughout the trades. And I look to take one trade, and that one trade should give me 5 RR, and I've passed the challenge. At funded stage, the risk remains 0.5%. So when I stack multiple accounts, I go to 0.75 or 0.8. That is it. So at the current level, I'm not that much. I've not stacked multiple accounts, and for that reason, I would risk 0.5. But then once I go to the level, I'm still a children in this game. So once I go to large fundings next year, the goal is to get at least $1 million next year. Now with the multiple accounts, I'll be risking 1% so that I can make more, because now I shall have had a buffer. Without buffer, this is the risk percentages. So with this, I don't have any option of over risking. I've given you a clean plan on how I do it. So make sure you can also follow my lead. So in summary, do not desire to catch big trades so that you can solve your money problems. The money problems will not be solved by the market giving you a one-hit wonder, a one big home run. Please don't do that. You will end up blowing your account. Now, the other way greed manifests is revenge trading. Revenge trading. I don't know what to tell you on this. If you are revenge trading, it means that you still have your money problems brought to the market. You still have some poor emotions. You're not being a child. Let me just be honest. You're being a child. So stop being a child. Why are you over trading? All my setups, I only take one trade per setup. One trade per setup. If you've watched all this course, you see that I only take one, and once it is topped out, I'm either wrong, and actually 80% of the time it will be wrong, and the market will keep going in my opposite direction. So that is why I only take one setup at a time. If the opposite is true for you, that anytime you are wrong, 80% of the chance the market goes to your direction, then it means you can re-enter. But for me, one setup is enough. Once I get stopped out, I know that only 20% chance that I may see the trade still playing out in my direction. I know that if I'm wrong today, I will get the same setup tomorrow. That is why you see I only take one trade, one setup, one trade per setups. So if it is Euro USD, like you can see here, if you've watched the previous video, you can see the way it is pumping down. That is as expected, because our bias for the week is sells, and I will not going to buy any time. So this is Monday. I'm waiting for tomorrow Tuesday, so that I can hope in for sales. If I get stopped out on Tuesday, I will not re-enter, because I know that this liquidity needs to be stopped, to be taken out. So I'll just re-enter on Wednesday for another re-entry, or even Wednesday I may get up good setup. So that is why I don't revenge trade. Once the setup, and then another form of people revenge trading is I expect here I have a sell bias throughout the week here, so that I can bring the market to these lows here. So after seeing that I was topped out on a sell, I hope into a buy. Slap your face. I don't want to slap your face immediately. Something is wrong with you, and you're going to fail your generation, because most of us trade so that we can remove generational poverty, and you are here getting people back to the generation. So many people depend on you, your children, your brothers, your family members. But then here you are now being over emotions and over ridiculous to a point of whereby with a very clean bias like this that sells only, you want to take a buy. I don't know what to tell you, but just know that you're failing a generation, and you're taking them back to where you're supposed to be redeeming them. You are taking them back to if you're a Christian, you're taking them back to Misri or Egypt when people are now living headed to Canaan. Please don't do that. You rather revenge trade on the side of your buyers than to revenge trade on a ridiculous way to a point of planning this whole setup throughout the week, this liquidity based setup, and then all of a sudden you change your liquidity. I did Sunday analysis and then waited on Monday, and then Tuesday market gives me entry. I get stopped out. Instead of looking for sales next on Wednesday, I look for buys. That one I'm feeling my generation. Please don't do that. So don't try to make back the losses. Don't try to break even. Stick to one setup and that's it. Stop forcing profit. Nobody said market does not owe you anything. So make sure you don't force any setups by trying to get your money back. The market owes you nothing. And for that reason, respect that decision. If they owe you nothing, just stick to one setup and that's it. So, in just summary, follow your trading setups and make sure you take one setup per setup. If you're trading like me, just take one trade per setup. Do not force profit. Do not bring your money problems to the market. The market did not take you to where your money problems, to your current money problems. I think that one is very, 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 very explicit. So the next way in which greed is manifesting is being impatient. Being impatient. So being impatient is something that you can only be pinched, or you get some stupid trades 2 to 3 times. It hurts so much that you choose to be patient, because you are thinking that the market is leaving you, which is formal. I'll discuss about it shortly. So you choose to just hop in instead of waiting for pullback. I know I explained in my video here of the cars. Where is it? Okay, the cars of waiting for pullback, video 41 here. Watch it. You will realize that all the strategies are break and retest. So everybody enters at the retest unless you enter at the break. So that people who enter at the break are people who have very low risk to reward. Or 1 to 2, 1 to 3 is good. 1 to 2, 1 to 1, or 0.5, or negative risk to reward, where you risk 2% and you take 0.5. Yeah, some people have that. So for you, you decide that you're not going to wait for pullback, and so you just enter in. Let me explain. So if we are selling, like I'm expecting sales next week, so this becomes Asia. That is Asia price action, and then this is London price action. So I'm expecting to sell. So what do I need to do? I need to just mark. I just need to fib London price action and get my re-entry protocol, like continuation entry protocol. So my entry should be somewhere this zone. My entry should be around this zone. Stop loss Asia high. I expect my 1 to 5 risk to reward. So New York has just opened here, and the first thing it does is to blow down, first of all, to take this liquidity. The reason why it is taking this liquidity, if I look at it on my side, is so that it can get the momentum to come and pull back here and take my entry. So people who are impatient will do what? Will see that this blow down, the market is not going to pull back at 75. So they choose to enter here, stop loss somewhere around this zone. Market now does what? Takes them out and then gives the real entry. Be patient. If you are supposed to wait for pullback, wait for pullback. If you're not supposed to wait for pullback, take your entry. I think that is very clean. Be impatient. Be patient. Be patient where patience is needed, and stop doing the rush. Now, same to when you're taking profit. If your take profit is at, let's say, this zone here, please take your profit. I'm a victim of that. Sometimes I do. My take profit is, let's say, is down here. This happens when I'm in drawdown. I tend to hold my runners long without taking partial, and it's something that I'm working on so that I can kill that emotion. Take profit where it is, not where you see in one-to-one running. If you're watching this Rogers Rama, you see 1 to 2 running, and we expect a 1 to 4 on the minimum side. Then you conclude that this, since the market is pulling back, I don't want to lose this amount, so you close. Don't be stupid. Let the market play. Let it give you your statistical age. I think that should be very clear. So another form of people who are impatient is people who don't want to skip learning. I have so many in my DM who don't want to learn. They just want to make money. And like I said, stop bringing your money problems to the market. Let me give you a small explanation of people who want to make it in this industry. People who want to make it. Number one, people who take mentorship. From a point of I already know this one. These ones will never make it easily. This one can make it, yes, but not easy. You're going to struggle a lot, because if you're taking a mentorship, that means that you are willing to forego whatever you've learned and stick to what you are learning. Take the mentorship with open mind, and after that conclude if the mentorship is okay or it's hogwash. If it's hogwash, then you can take another mentorship. People number two who never make it, people who only want signal. These ones will never make it, because they are bringing their money problems to the market, and for that reason they'll be chopped. Their monies will be used to fuel the liquidity that is needed. They will lose. If you take signals without understanding how the person trades, you are just wasting your time. It's just a matter of time before you lose your money, and you get your ancestors slap your face so that you can relieve them from the poverty. Number three, for people who will never make it in this game, are people who buy funded account first. People who buy funded account, challenge account first, before learning and finishing their course. If you are this person, you are going to suffer in this market. First of all, you've given ProFarm free money. You know that I bought an account when there was an offer, and I traded it 1 year later, because I knew very well that I am trading on a murky water, and therefore I'm going to be chopped. Why? Because I bought an account before learning. So it was on an offer, and I decided to buy the account just to keep it. And I never traded it. Throughout every month, I would just place one trade of 0.01. And then it runs for 5 minutes. I close the trade either in profit or in, and I use zero USD throughout for 1 year, something that you can't do. So people who buy a challenge account first and then want to learn later, or just want to make money fast, they are bringing their money problems to the market, and as usual, they'll be done that thing. Their money will be chopped. Then another kind of people who are not going to make it, and they are going to be more impatient, are people who ask stupid question. Ask this stupid question. When can I start making money? Or how long will it take me to make money? Those ones have started on the wrong gear. It is like switching on a car and you want to start it from gear 5. Unfortunately, I don't have good news for you. You're not going to make it. So the answer to this question is that you're not going to make it. Please come to the market and humble yourself. Even if you are an aeronautical engineer, you are a software engineer, you are a mechanical engineer, you are mechatronic engineer, you are a lawyer, you are a doctor, the market does not care. There are people who have taken PhD here, people who have traded 20 years, the people who have traded 40 years, they look at you and they just wonder, because you're not going to make it. With such level of arrogancy you bring it to the market, It's going to humble you, and you will go back to your default setting, and that is the course you did. Stop asking the stupid question of when can I make it? When do you think this thing is going to take me? This thing is going to take you based on two things. Number one is the level of hard work, and number two, level your laziness. And a bonus one, if you're learning from the right person. So people who ask this question will never make it. So maybe I can add the last one. I nearly forget it because these things I'm getting them from my head based on the experience and the people have been teaching for quite a while now, and I understand the kind of stupid ways people come to the market and start asking questions. So I think I've forgotten it, and I was almost writing it before I was explaining a certain concept. The people who ask stupid questions. So just make sure that you don't fall. I've forgotten it. I'll add it if I remember. I'll tell you. This kind of people don't make it at all. This kind of people. Okay, maybe I can just add these lazy people. I don't need to, but I've taken my time to create. These are my bonus. These are my bonus course. How many GB it is? 5 GB of course that I've created. How many videos? I've heard this is 6 videos that I've created, and this is 19 minutes, and this is 57 minutes. Me sitting and explaining a concept. 10 minutes. This is 1 hour 13 minutes. This is 1 hour 30 minutes. This is 1 hour 46 minutes. Me explaining my concepts like that. This one I've not even shared. I decided not to share to avoid confusing people. Just to share these two strategies, this one and this one. So, and I've also sat down and created how many videos. This is about 40 something videos. This is 43 here. That is basics, and most of them are as voluminous as this one here, which is 1 hour 20 minutes, 1.6 1.15 GB, 1.15 GB of content. And that shows how much I was dedicated to these things. And then somebody is not dedicated at all to sit down and watch this course. I can assure you are in this category. People will never make it. The same way to this strategy here. You can see this is 12 videos, and some have not even edited. Some are still here. You can see this is nearly course over. This is how many? This is 1 hour 13 minutes. This is 1 hour 36 minutes. This is 1 hour 20, 1 hour 2 minutes. This is 53 minutes. This is whooping 2 hours 14 minutes. And this is something that I've been doing for the last 3 months, creating the whole course for you guys. And then somebody is lazy enough to only want to ask me for give me the actual strategy. I don't have time to watch the video. You can never make it. That's what I've told you. Unless you change that mentality, you are not going to make it. So these are kind of people who are impatient, and for that reason, they will not make it. I think that is very, very clear. Don't be lazy. Take your time, watch the videos, or take your time and go through the course you are going through it. If you cannot sit down and watch something that somebody has created for you, then Forex is not for you. People who are impatient, let me add this as the last part of it, is they want the get rich quick scheme part of Forex. This is just let me just put it here in summary. The impatient people want to make money fast. Let me be a little bit aggressive on you again. Now let's check what degrees take to make money. Let's check what degrees take to make money. In most universities, I'm talking from East African University and most universities that I know, even from Americans, something like law, like education that I did, it took me 4 years. It took 4 years to graduate. Computer science, you need at least 4 years. uh, uh, what else? Medicine, you need 6 years, and its related courses, 6 years. Uh, uh, which one again? Engineering, you need at least 5 years. Mechatronics, you need electrical engineering, communication. I don't know. There's so many engineering, mechanicals, biotech engineering. Those ones at least 5 years to graduate. But then you come to forex. You want to earn within 6 months. You want to earn within 1 month. And why do you want to earn within 1 month? Because these things are because you think that forex is just a quick way to make money. Yet people start to be profitable after 3 years, 4 years. Myself, it took me 2 years to be profitable. You want to come here and start telling me how you need to start earning. You need to start earning within the first 1 month. You know that is a lie. Please don't fall into such scheme. Forex, just like any other high paying, and to make the matters worse, forex is highly paying than all these ones here. The only difference is that these ones are more stable than forex. But once forex becomes stable, it is paying that these courses will never pay in lifetime. So forex is the only thing that you need to be reversing and taking 6 years to be patient with it. You want to take 1 month, you want to take 3 months. Please don't be ridiculous and don't be stupid. Take your time, learn through it, and everything will be all right. I think that is very, very clear. This should go home. People who are impatient, who want to make money quick, who want to be rich, and at the same time, to make the matters worse, this is not a rant. This is psychology, one-on-one, very brutal honesty, because you need it. They paid here so that they can have uncertainty of earning. You paid for 4 years. I paid my degree for at least 4 years, and I wasn't sure of getting earning. But this is the only thing you are paying, and you nearly have a guarantee that if you don't quit, you're going to earn. And if you just do two things, that is, you don't quit and you learn from the right person, you are going to make money. But here you opted to pay and not get a guarantee that you're going to get jobs, because we know so many graduates who don't have job. So please don't be in that category. So the last kind of people who are not going to make it easily, people who believe that they can't buy mentorship. They can't buy mentorship because these things are free online. Yeah, that is true. They are free online, but the reason why people buy mentorship is for curated learning. Curated learning and someone to ask questions. People don't buy mentorship for the strategy. Otherwise, all the strategies are online. Most of them, nearly all of them, are online. But for somebody to sit down and curate their strategy for many years, like myself, this has taken me 2 years to be just curating this a rhyme strategy, which is the rhyme strategy, which is an SMC concept that I coined myself, which is the raid of liquidity. Then we have the initiation leg, and then we have the mitigation, where you take your entries. Then you have the expansion, which should be taking you to your take profit. So this is TP, then this is entry, very mechanical, and then this is the momentum, and then this is liquidity. Raid is for the liquidity part, raid of liquidity. Simple. So it is the rhyme strategy. It has taken me very long time, and it is curated from the basics that I took from my mentors. So please make sure that you are buying. If you resonate with somebody, you buy their course and then you go with it. If you're watching this from the course, it means you resonate with what we are doing, and therefore you are able to go with this something that we've built over time, over the years, that has passed through the test of time, which is it has traded for a while now. So these are the kind of people who are not going to make it, and they're going to be impatient because they'll be bringing their money problems and their ego to the market. So make sure that you don't skip learning, you stick to the strategy, and then you don't bring your money problems to the market. Now, so make sure that you don't place your money problems first here. That one is a very key thing. Now, the last way in which greed manifests is, I'm being honest here, uh, is uh, is holding trades. Let me just say, reasoning with running trades. You start reasoning with a running trade. I do that sometimes, but it's something that I'm working to improve on. Sometimes I do reason because I'm human being, I'm not robot, and that is the first thing I told you. You start reasoning with a trade that is already running. That means that you start getting it all wrong, because all the strategy that you've watched, the strategy that you finish watching, has got an entry plan and exit plan. If you have one of your own, well and good. So you have the entry plan and the exit plan. So your entry has been tagged, which is okay. Now your exit becomes a problem. You want to hold beyond the needed RR, you will be burnt out. Don't hold your trade beyond beyond the needed RR, the one that you always take. You will be burnt out unless you are in heavy drawdown and you don't mind being stopped out at break even. The only time I hold more is when I already go break even, and therefore I'm comfortable if I can add in more RR so that I can go out of drawdown. Of course, that is wrong, but sometimes it works for me. So try and see if it will work for you too. Otherwise, you can just be going for fix 4 RR or 5 RR that we go for, and you're good to go. So please don't hold your trade so long you forfeit your exit plan. So that you don't mess up your win rate and your entry criteria. And you see, the reason why people ignore this is because they want to make money, still bringing your money problem to the market. So make sure that you don't just focus on hitting home runs. Theophilus, if you're watching this, not all the time you've recovered your losses because you've been taking profits and not waiting for home runs that you always mark for me. That I tell you that I don't even understand how this is going to play. Theophilus can mark for me a setup like this. Gets a very good entry. Let's say Euro USD, you've gotten a 10 pip stop loss. Then I know that we are supposed to be selling, I agree. But then you start marking for me 1 to 20. I know that sometimes we do get them. For example, if you got this sell here, you must have gotten it. But then tell me, how often do you see such a drop here? Very rare. So why should you be holding for me home runs? My entry are very nice and my exit are very clean. I don't want to go within, whenever the market, if I'm buying like last week I was buying, whenever the market touches this point here, I want to exit. This is around the 80% zone. Theophilus, if you're watching this, you know the 80% zone that we take our profit. So even you, if you've taken the whole strategy, you know that we exit around 80%. If today I've gotten a sell here, I will be exiting at this is 0.7%. So around 80%, this zone I'll be exiting. And I told you I'm working on a plan of leaving some runners to go to the full breakout structure. So this happens on a very rare occasion that I would go for this breakout structure, especially if I want to suit my ego, and I don't mind because I've already taken some profit and I'm already in profit. So sometimes I suit my ego to go for these full break structures, especially on pro trend trades. So please make sure that you don't hold your trade for so long by start reasoning with the trade that it may not reach this level, so you want to close, or it may pass this level, so I want to take my profit. That is wrong. That is wrong way of reasoning with the trade. Once you set up your trade, leave it alone. I also do disturb my trade sometimes, especially on Fridays. I don't want to leave my trade to go over the weekend, so I can just choose to close. Yet I know that whatever I'm doing is wrong, but I just choose not to go over the weekend, especially if it is in profit. I just close that profit and I look for more trades next week, especially for trades that take place on Thursday. So that is greed with utmost brutal honesty from my side. So let's look at what fear brings to you. So fear, uh, fear is another form of problem that you're going to have in the market. And fear is based squarely on lack of two things. Fear is based on lack of two things. Lack of enough time that you've taken on the market, and and confidence, lack of confidence. That is what will make you fear uh, fear to kick in on your strategy. So another bonus thing is still money problem. Don't bring your money problem to the market. I think I've repeated that enough. So let's see how these things manifest. So number one is that you fear getting stopped out. Fear SL. You fear being stopped out. You fear losing money. So your ego plays a very critical role here. You think that you rather be right more often than wrong. Of course, that one also affect me, but not on a grandiose scale. So please, you already have a fixed entry criteria. Please stick to it. Stop thinking that you will always be wrong. Yes, because you will be wrong, but more often than not, you'll end up making money. Stop thinking of only making money. Stop thinking of being wrong. Instead, think of making money. In the long run, it will work out, and if it will play out, give it more time. So stop fearing your SL being hit. Stop fearing being wrong. That is what I mean. So this fear of SL being taken is manifesting in two ways. That is fear of being wrong and fear of losing the trade. So you end up hesitating on a trade that should have been playing well. I do that sometimes, especially if the SL is big. Sometimes I may increase from 75% entry to, let's say, 80, or even a fair value gap or an order block. If the SL is small and I feel like it will compromise my entry to my risk to reward of 1 to 5, sometimes I interfere with it a little bit, but that is something that not oftenly manifesting in my trading style. So stop focusing on fear of SL. Trust the system and let it play on your favor. The other way, so so as I finish up on fear of SL, make sure that you don't second guess your entry. Just stick to whatever is there, or have a mechanical. If you're watching this and you've not taken the course, just try and be as mechanical as possible, so that you have your fixed entry criteria and maybe your exit criteria. Just have it fixed and you will have fear of SL gone. So the other form of fear is FOMO, fear of missing out. Now, fear of missing out is still brought about by your money problems and overconfidence. So sometimes people are just overconfident that this thing is not going to pull back, and for that reason, let me enter. You are starting to have FOMO. At that particular time, you need to shut your computer and do something else, because now emotion is taking a toll on you, and you may end up making the decision that is wrong. Once you set your limit, or once you do your market execution, let the trade play. I think that should be very clear. So don't feel that you will always be missing out trade. Yes, it is true. You will miss up so many trades and you will catch up so many trades. So there will always be trade next time. So please just don't focus on single trade that you missed. Another thing is FOMO will make you break your plan. So it will make you break your plan and you end up over trading. For example, if the entry was here, the one I've just explained, this is Asia, then this is London, then you've marked 75% pullback of London price action, and then for whatever reason you FOMO and you get your entry here, and that is breaking the rule of thumb. Never sell at the low of London. You can always sell at the high of London. So you took your entry here, you break the rule. So that means that you will have to, again, market pulls back to 75. You say that I won't do that mistake again. So let me just place my 75%. It stops you out again. And that is second stop loss. And then it starts to give a bearish order flow. You enter again, it stops you second. So you see, fear of missing out has now made you to have so many stop losses. Instead, you would have just had your one stop loss at 75%. You take your stop loss, and then you come the next day. For example, the reason why I'm not even struggling to trade today, it is 1 hour since New York opened, and I'm not gone past 1 day time frame, because there's still more space. My take profit is here. So that means that tomorrow I'll still get entry around this zone, then it will just drop. This is just showing me that my bias is correct. Monday is showing me that my bias is correct. I'm not having any fear of missing out because I know Tuesday, Wednesday, I'll get good setups. So please don't focus on fear of missing trades. There is always more opportunity to come your way. I think that should be very clean and ingrained in your brain. And for that reason, don't break your plan. Just stick to fear of missing out is solved by very simple thing. Stick to your plan. Stick to your plan. That's all. If you stick to your plan, you've broken out. Stick to your plan. You've fixed the fear of missing out thing. So another form of fear that people come is lack of confidence. Lack of confidence. So how does this manifest? It manifests in a fear of not being good enough. So you lack confidence and you keep switching strategy from one to the other, is because you are lacking confidence. Now this can be fixed by two things. Number one, backtest for a month maximum. No, backtest for 2 weeks. Backtest for 2 weeks, at least 2 weeks, using the checklist that I've already given you. Or if you have a checklist, just backtest for 2 weeks. If you don't have a checklist, please let me know. Also after backtesting, go to the market and do at least a 1 month forward testing. Now, why is 1 month? Let me tell you example of useless advice you will get here in the market. Example of useless advice in forex. Example of useless advice you will get in forex, in forex, in the industry. One of them is this. One of them is this that I've already shared with you. Trade like a robot. Trade like a robot. That means that you should be not having emotions while trading. That is wrong. You will never do that. You will never trade like a robot. You are not an EA. So that is a useless advice that will never work. Number two, backtest until you have confidence. Backtest until you have confidence. Thank God my strategy does not need people to backtest a lot, because it depends on sentiment. So you can only forward test, which is the most important thing. So backtesting is a waste of time, a waste of resources, and a polite way of being lazy and avoiding the market, unfortunately. So stop backtesting so much. You can only backtest for 2 weeks. After that, you need to forward test. You need to develop the reps in the market. You need to see them before they happen, so that you can learn to play around your patience. Backtesting does not have patience, because every data is ready. For testing, you have to play around with your emotions. So that is why for testing is king. Backtesting is waste of time. The other kind of advice that I feel like is one of the most useless one is now I've talked so much and I nearly forgot it. Okay. I think if I remember it, I'll let you know. That is another form of useless advice that that people get. Yes, I've just remembered it. That trade demo for 2 to 3 months, or even sometimes they even go for as long as a year. Trading demo for a year or 6 months or 3 months or 2 months is as useless as backtesting for 5 years. Do not trade demo. Currently, we have enough demos in the account. We have enough demos online. How do you get a demo? Look for a 5K account in prop firms. Or some even have 2.5K accounts. That is the polite way of trading demo with emotions involved. Demos lack emotions. So why is it useless? Because it lacks emotions, and emotions can only be gotten over time. So you are passing time doing useless thing that lacks emotion. Do not demo trade. Once you're done with the checklist, go demo trade maybe for 2 weeks while you learn how to calculate your lot size correctly. I think that is the only reason why you need to demo trade. You trade for 2 weeks maximum just to get in the reps of knowing how to calculate lot sizes. So the only purpose for demo trading is to know how to calculate lot sizes. To know how to calculate lot sizes. Otherwise, with that and lot sizes and taking placing SL and TPs or even break even. That is the only purpose for demo trading. Beyond this, you're wasting your time. If you like wasting your time, go ahead and trade demo for a month. The only time you should be trading demo for a month is when looking for money. This 5K account, for example, in ProFarms, you can even get as low as $15. If you don't have $15, you can be trading demo for 1 month while you look for $15 to buy a 5K challenge. Another example of demo of wasting time, useless advice, is to trade a $10 account. Trade a $10 account. This is the only advice that is 50-50, because trading $10 account, you've only evaded trading a demo and you've evaded back testing, which is nice. But trading $10 account is as good as trading demo, because you are going to lack enough confidence that you will need. Trading a $10 account, you will lack enough confidence you will ever need to trade, because you will be over risking your account so that you can at least risk $2. If you're risking $2, it means you're risking 20% of your account. So you are over risking already. At the same time, you will be losing more, because the money is so small such that a small move into the market, it has already blown your $2 loss. So trading $10 account is one of the easiest way to waste time. Take that $10, buy a 2.5K account. $10, buy a just look for ProFarm match. It will solve your problem. It will find the account ProFarms with 2.5K account. Trade that one alone for that particular time of the month, 2 months, 3 months. So this will help you build the reps, and this will help you build the momentum you need. So I think I'm very clear on this, and this is the real psychology you will ever need. Very brutal advice. Now, once you avoid this and now you are trading the real deal, what you need to do is trade management. Trade management is very simple. Number one, there are 2 ways of doing trade management. Number one, stick to 10 trades rule. If you've not taken 10 trades, don't think about changing even a full stop in your strategy. Take at least 10 trades and compare that if your win rate was at least 30 to 40% using our strategy that you trade, because we do 4 to 5 RR, you will be profitable. That is how to solve your psychology issue. Just take trades without changing full stop on the checklist and focus on taking at least 10 trades. Once you take your 10 trades, it can be on either of these demos here. I'm very specific on what I'm pointing. These demos here. If you know how to calculate lot sizes, you don't even need to open a demo account. You don't need to open a, if you've been trading and you're only watching this for the sake of it, you don't need to open a demo account. All you need to do is to maybe trade demo while you make money. You look for money elsewhere to get 5K account. And then after that, from the 5K account, make sure that you take at least 10 trades. How do you take at least 10 trades? By risking 0.1 maximum. After that, you will be gauging whether you got your entries correctly, everything was correct, and you've taken 10 trades. That would be enough to gauge your profitability. If you don't know the 10 trade rules, here it is. The 10 trade rules. Watch these 10 trade rules. This one will really help you a lot. I don't need to explain that because the video is already now expansive. I don't need to go beyond that expansive. If you want the 10 trade rules, you can also let me know if you are watching this elsewhere, in case you're watching it elsewhere. because this is a green thing. I can post it whenever, anywhere I like. Now, the other way to stick to very good trade management, TM, is 30 days. 30 days, no strategy change. Don't change anything on this strategy that you are watching if you've not traded it for 30 days. Just know that you are now starting to be in the characteristics of people who will hardly make it. So don't change that. Also, that one I also have a video for it here. 30 days, that is video 38. 30 days, no strategy change. I've explained everything, and that video is about how many? 8 minutes. The 10 trade rule is 32 minutes. So this is a lot of psychology packed in it. Hope that is very, very clear. So other trade management is having proper entry and exit plan. Which should be in your checklist. Very mechanical. Have as more mechanical as possible. And that should be it. That should be it for psychology. If you get this right, this is the advanced option that rarely do people talk about it in social media. So this is all you need about psychology. Now save this video, download it, and you'll be watching it maybe a day. Every day you need to watch this video. By the way, I do save good videos so that I can be watching. I save psychology videos. I watch a lot of psychology videos. They are saved in my local machine so that I can be watching them. Good videos. I save them. So do that. I'm also going to save this and be listening. Of course, I don't like listening to my voice, but I'll be listening to it too. I can even just convert it to audio and then I'll be listening because I can remember what I typed here. That should help you in your psychology. I think that marks the end of this video, and see you in the next one.